Hey everybody, Brian here from quantlabs.net. I just wanted to let you know about a indicator or an alert that went out on Bloomberg yesterday concerning volatility analysis. I put this on my blog this morning. It's concerns with this URL here. The thing I want people to know is that they've been expecting volatility for the last couple of weeks as Greece may default. But here's what the interesting part is in the last paragraph, is that commodity producers were among the best performing stocks both before and after central moves began. So if there's going to be a commodity boom, the volatility will take off because of that. Not only that, but if there is a Fed interest rate hike in September, is it safe to say over the next couple of weeks or week even, we can expect to see volatility start to go up. Now here's the actual article, but again, this is what I'm referring to. Now you're going to be wanting to watch the VIX here. Now here's some interesting problems. For volatility surface that I have demoed before, this uses option chain data for the VIX. So you come under Yahoo Finance, enter in the VIX with the option chain data for the calls. Here's the data. Okay, now the problem is you can't programmatically download this anymore. It changed sometime in January. There's these scripts here that used to work just fine. This one works fine, but it is only good for stock. This is now, as you can tell, an option for it's a commodity or an options or whatever. But there's also this one as well. This one works only for stock. This one works kind of, sort of, but to debug it, I'm not going to venture down that road. So because of that, I've decided just to check roughly by human again if there is VIX is going to take off. Now here's the thing. This is the source file, the data file for this volatility surface project. So it's using option chain data. Option chain data that's going to use is the following. It's going to use the calls, it's going to use the time of expiry, the strike, and the price. Okay, that's within the option chain data. So the question is, if you're just going to follow the VIX, what's the best way to go about to verify if there is volatility? So you can visually, by human ways, be able to track the VIX. Now again, I need your input. Make sure I have the right thinking here. So I'm under the calls. I have a bunch of contracts that'll take me to the end of this year. So if I look under July, volatility is down. Okay. If you look at August, volatility is down. If you look at just the change. Okay. September. So volatility, a lot of them are just pointing down. October, it's all negative. Now, I could be wrong on this, but does that mean that volatility is going to stay in the negative, meaning there's going to be no spike? Because if you're using options calls to sort of like use as a hint, as an indicator to see where people are betting on the VIX, and it's mostly negative, doesn't that mean that the VIX is going to be staying lower than what this article will hint at, that the VIX should spike? Let me know what you think of that, because I'd be very interested to hear other people's opinion just on the VIX, to see if there is volatility coming using the option chain data for volatility on all the calls for each particular contract. Let me know what you think. Talk to you later.